I'm Gene Kuleta, editor of the Latin America Advisor at the Inter-American Dialogue in Washington. The economic effects of the COVID-19 pandemic have included lower oil prices and a faster shift toward renewable energy. Those are among the topics covered in the latest energy outlook from BP, a company that is pivoting toward cleaner energy. Joining us to discuss the energy outlook is Jorge León, an oil and gas supply economist at BP, and he joins us from London. Thanks so much, Jorge. I appreciate your time today.
Hi, Gene. Thank you so much for the invitation. It's a great pleasure.
Now, there are several uncertainties that are facing oil and gas producers. Now, could you tell me a little bit about those uncertainties and what factors are necessitating this transition away from fossil fuels and toward renewables?
Indeed, the industry is facing a lot of uncertainty from different sources. The first one is whether the energy transition will happen and when it will happen. We don't know. We cannot predict the future. In the energy outlook, we have a set of scenarios, but we're very clear that the objective of the energy outlook is not to predict the future. It's more understanding what are the ranges of uncertainty around those scenarios. But having said that, we do know a few things about the energy transition whenever that energy transition might materialize. The first one is that the share of fossil fuels, that is coal, oil, and gas, will decline over time. We think that it might drop up to between 60% and 20% in 2050. That's the first thing that we think will materialize. The second thing is that the share of renewables will increase massively. We expect a massive increase in renewables, particularly in solar. And the third thing, which is almost certain, is that the world will continue to electrify. Actually, the share of electricity over final consumption is likely to increase. Those are the things that we know. Now, how the world might evolve in an accelerated energy transition, we think that we are likely to see a more diverse energy mix in an energy transition whenever that happens, where final consumers will have a higher share of the decisions, as opposed to before, when the energy transition, the energy mix was more driven by fuel availability. And also, an interesting topic is that we don't know what would be the final impact of COVID-19, of course.
Exactly. Could you tell me a little bit more about that? When you look at the pandemic and the effects of the pandemic on oil and on renewables, how do you see that in terms of how that plays into this whole situation in terms of oil and in terms of renewables?
Sure. I mean, COVID-19 is primarily a humanitarian crisis. The report that told now exceeding almost 1 million people. And I think that the fact that the new cases are continue to grow and that there's no generally approved vaccine means that any any assessment that we do right now might be preliminary, and there would be high degree of uncertainty. However, we do think that the economic activity will recover after COVID once the virus is brought under control and the restrictions are eased. But there are some effects that will persist over time. If we compare in a scenario where there's no COVID versus in a scenario with COVID, global GDP is likely to be lower, 2.5% in 2025 and 3.5% in 2050. Now, the interesting thing for our readers, I think, is that these economic impacts fall disproportionately on emerging economies such as Latin America, whose structures are more exposed to the fallout from COVID. Now, having said that, the impact that COVID might have on energy transition is still unknown. Now, my personal view is that probably COVID has highlighted the fragilities of our planet. We see governments, particularly in Europe, putting together some development programs to reactivate the economy that are very, very green. So I don't know, but COVID might be a step change that we need for a faster energy transition.
Okay. And, there's also been a lot of talk in recent years about peak oil demand, whether the world has already hit that peak in terms of the demand for oil. Of course, the International Energy Agency and OPEC say that peak could come in the 2030s. What's your view on that? And what are the implications for the oil-dependent economies in Latin America?
Sure, that's an excellent question. And I always like to say that I don't know when peaking oil demand, if peaking oil demand has happened or not, and I don't know when that would happen. And I think more importantly, it doesn't really matter that much. I mean, putting a specific date on when global oil demand might start declining, I think this is the big point here. I don't know when peaking oil demand will happen because I have three scenarios in the energy outlook. In two of them, we see peaking oil demand in 2019, and in other scenario, we see happen sometime in the next decade. So I don't know. There's uncertainty there as well, and it's also true that some products and even some regions of the world will face peaking oil demand before others. So, for example, oil demand in the OECD has already peaked. There's also some types of crudes which might face peaking demand before others. So it doesn't really matter that much. What I think it matters is how the producing economies will react to this new paradigm whenever that happens, right? So, and I think it's interesting to see that in a world where oil demand falls rapidly, whenever that happens, the competition among producers that are running to monetize the resources will increase significantly, and that is a challenge, but also an opportunity for our countries in Latin America. There's other sources of competitive advantage, not only the low cost of supply, but also things like carbon intensity of the crudes, where I think Latin America will place the location. Also, the associated gas supply will increasingly become important. I think their national oil companies in Latin America are doing a lot.
Now, so with regard to peak oil demand, whether it happened in 2019, whether it's this year, whether it's in the 2030s, is it kind of a generally accepted view that if it hasn't happened yet, we're pretty close to it and we need to sort of watch for that transition and prepare for it?
Indeed, we should prepare. But it's also true that if you see what would happen with the supply of oil if we stop investing today in upstream oil production, it will fall very rapidly because of we know that production of oil has a very high decline rate. So even in a world where we would have rapidly falling demand in oil, we will still need to invest in upstream oil and gas upstream investment. And I think that's an important message that we want to send through.
When you look at how oil dependent some of the economies of Latin America are, what does peak oil demand mean for them? Are they going to be in big economic trouble if they don't change things fast, or are most on pace to roll with that transition? Or how do you see that in terms of the economic danger that could be facing Latin American countries?
I honestly think that for the next 20 years or so, whatever happens with oil demand is not going to affect massively the oil revenues for our countries. Now, it really starts mattering when oil demand starts falling very rapidly. That's when things start changing, and then you might expect that, for example, a situation where demand is falling rapidly, and you question yourself, what would OPEC do in such a situation, and that would have a clear impact on the oil prices. Now, what I think countries like our countries in Latin America can do is to start preparing for that transition. There's still a market for oil and gas, as I mentioned, particularly for gas. The outlook for gas is more resilient than the outlook for oil. So you could imagine a situation where countries such as Brazil, for example, which has a high percentage of associated gas production, might start favoring a little bit more gas than oil. As I said, gas is still more resilient than oil. So producers such as Bolivia, Peru, and Argentina are probably better positioned in that world. And for other countries, the oil producer countries, I think that focusing on efficiency will be key. So I always think that this poses a challenge for our countries, but also a great opportunity.
And I wanted to get into natural gas a little bit more too. You mentioned Bolivia, Peru, the other big gas producers in the region. Could you tell me a little bit more about the projections for natural gas, perhaps that are contained in BP's Energy Outlook, and also the LNG trade, and how you see that coming in coming years, and whether that trend is going to be favorable or not for those gas producers in South America?
So the main message from the outlook in terms of gas is that the outlook for natural gas is more resilient than the outlook for oil in all three scenarios that we consider. So, for example, if I take the scenario rapid, which is consistent with Paris, with limiting the increase in global temperature well below 2 degrees, the outlook for oil in that scenario suggests that oil demand will decline by 50% between 2018 and 2050. So a massive, massive drop. Now, if I compare that with gas, the outlook for gas in that scenario actually shows growing gas demand in the next 2 decades or so. And then only in the second half of the outlook, marginally decline, so that the final level of consumption in 2050 is similar to the consumption today. So definitely more resilient. Now, why is this? Why is gas more resilient? I think it's because of two reasons. The first one is that there's a role for natural gas combined with carbon capture and storage as a source of almost zero carbon source as the world continues to decarbonize. That's the first one. And then the second one is that there is a role also for natural gas in supporting the shift away from coal in fast-growing developing economies, like, for example, in Asia in the next 15 years or so. So even though renewables will grow massively in the next few years, there's probably, and we think that there is a role for natural gas to support that shift away from coal. And in that sense, as I said, Argentina, Bolivia, and Peru are very well positioned in that sense, because the demand for their product will be increasingly needed to support that energy transition.
All right, terrific. Our time is starting to run short, but this is such a big topic. I just wanted to see, is there anything else about the energy outlook that we would be remiss not to talk about before I let you go?
I think that there's a lot of in the energy outlook, so I would invite everybody to go online and download the data, download the graphs. But I think that a very interesting topic for me would be what are the risks of delaying the energy transition? And fascinating topic. And I think that really shows how important it is to react now to the energy transition. The longer we leave it, the more difficult it will be in the future. So I'll leave you with that thought. But I think that there's a lot of material there for many people. So hopefully you'll enjoy it.
Absolutely. Well, thank you so much, Jorge. We'll have to leave it there. Appreciate you joining us today.
Thank you so much, Gene. It's always a pleasure.
Same here, same here. Jorge León, oil and gas supply economist at BP, joining us from London. I'm Gene Kuleta, editor of the Latin America Advisor at the Inter-American Dialogue in Washington.